Peter Eliades with you. This is a Stock Market Cycles update for Monday, November 9th. And look at this. Look at the magic of a child's first birthday. This little boy here is our first and only grandchild so far. My son and his wife. Son is Alexander. And this boy is Panayotis Maximos Eliades, or in English, Panayotis or Peter Maximos Eliades. And look at that look in his eyes. That's kind of magical, isn't it? Okay, that's one kind of magic. Let's see if we can find another kind. Let's start with this chart. We wrote a special report in early September of 2018 that talked about a special technical pattern that we had discovered probably a little more than 20 years earlier in the mid-1990s. I'm going to show you that pattern in a bit. I think I've showed it to you before, but a long time ago. And it's accompanied by our special trend line that we talked about a lot. But in this particular case, I want to show you where that special report was written. Here's this vertical line. This is actually August 31st, but it was Labor Day weekend. So the next market day was right here on September 4th. We wrote our special report on November 3rd of 2018, and it talked about this pattern and what we're going to do. And again, this is kind of a special update because this is something we seldom, if ever, do. We're doing this for both our regular paying subscribers and for the YouTube subscribers. For YouTube, mostly as a kind of a motivation for them to see what kind of information they'll get if they do become subscribers. What we're going to do is offer you for nothing, for gratis, this special 18-page report that we did back in early September of 2018. So that will be offered to our subscribers free of charge, and it will actually be offered to the YouTube non-subscribers free of charge. It's kind of a motivational tool for them to say, hey, we're missing out on a lot of good things here. Let's hope you feel that way about it. So, that much having been said, I want you to see what happened after we thought we were identifying a pretty important market top in this September 3rd newsletter. And although we did go sideways up for another couple of weeks, look what happened ultimately and very quickly. From the high that was reached in late September, early October, kind of a double top here, the market was down almost 20% in 2.5 months. So we think it was an important report that we wrote, mostly because of the research involved that went back almost 100 years on the Dow Jones Industrial Average. Let's show you one of the things we were looking at, and let's look at the Dow in order to look at that. Actually, I shouldn't have said the DJIA. What we're actually going to look at again is the S&P. And this is something that's familiar or should be familiar to a lot of you. This trend line, it's been almost a magical trend line that goes back. You can actually go back to the bottom in March of 2009. That's 11 years ago, folks. And let me quickly scroll to the left here and show you what kind of hits they've been. This is one of the anchors right here, the January of 18 high. Important market high that led to a very sharp decline quickly, and that high was not surpassed until more than a half year later, and just by a little bit before we had the decline we just talked about, this one that we showed you in September, October, November, December of 2018. But let's scroll back so you can see. Watch that broad red trend line, okay? Here it is up here. Almost exact hits. In fact, there were exact hits. The other anchor for this trend line is in April of 2012, so you'll see that pretty soon. But notice how it virtually exactly hit some highs here in 2014 and just missed in early 2015. But let's keep scrolling backwards to the left here, and there it is. Here is the first anchor for the trend line, April 2nd of 2012. Now, Watch this, though. If we extend this back to the left, extend that trend line left, and go back towards the 2009 low, look how close we came to that 2009 low. If you were, in fact, to start the trend line at exactly the 2009 low and go through the January of 18 high, which is right here, these trend lines would virtually lay on top of each other. You would not be able to distinguish them from this view. Granted, this view has stepped back a little bit, but if you zoomed in on it, even then you would have a hard time distinguishing. So that's how important this trend line is, and look at what happened today. This is really interesting. We saw this happen at the beginning. This actually was the beginning of September again, September 2nd and September 3rd, okay? So we got above this important red trend line. Let's look at a closing price chart. I believe it was only one day, but let's zoom in on that. Okay, so here the broad red trend line. We had a slight close above it here, and then what looked like a dramatic close above it here looked like a breakthrough to the upside above the trend line. And the very next trading day, look at this. Huge decline in all the markets. I don't remember what the percentage decline was that day, but I have like a 5% market decline in no time at all in this one day, moving back and decisively back below this trend line. Okay, so what happened today? Well, the election news is wearing in. People are saying, okay, it looks like we have a new president, but the move today was attributed to the COVID-19 vaccine, okay? 90% effective vaccine. That's huge and beneficial news. As you know, we gave you higher projections in the market before we knew anything about a 90% effective vaccine, and that's one of the reasons why we say very often that news does not lead the market. The cycles are the ones that determine where the market's going, cycle projections, if you will. And this is what happened today. Look at this. We did not close above that trend line, but let's look at an open high-low close chart. Wow. I mean, it looked like we were off to the races again. We opened very high above that trend line and could not close above it. So that's where we stand technically. That's the trend line. Here's the other thing I want to show you. We discovered a technical pattern in the market, as I said, over 20 years ago in the mid-1990s. And that pattern takes a 2-year moving average, that's this line right here, and it puts envelopes above and below that 2-year moving average. There are 3 envelopes. One of them is 15%, the other one is 17.5%, which we call the main envelope, and the third one is this one in light red up here, 20% above the moving average. The lower envelopes are exactly the same percentages. This first one is 15% below, 17.5% below, and 20% below. In the special report, or in the report that we wrote in early September of 2018, we looked at this pattern for almost 100 years in the Dow Jones Industrial Average, and we are offering that report, an 18-page report with a lot of charts. Obviously, if we show this pattern going back for almost 100 years, you know there are going to be a lot of charts to show you the interrelationship between these 3 envelopes on the upside and the downside, and the history of the Dow Jones Industrial Average in the market, okay? So, as I said, offered free to both our paying subscribers, and in this case, a special exception. We feel a little guilty because we told YouTubers we would give them 3 or 4 updates a month, and we had not done one in 5 or 6 weeks. We did one yesterday. We're doing another one today, which we're going to share with YouTubers. Hopefully, it will motivate you to become subscribers. and take a look at what I consider to be the best technical information you're going to find anywhere. And in terms of cycle projections, I don't know what more you could ask for. Speaking of which, let's take a quick look at the cycle projections. Okay, we showed you this is the 7 to 8 day offset, nominal 20-day upside projections. This is the NASDAQ 100. As you can see, we had fallen short, and today we opened right inside the nominal 20-day upside projection window and had a heck of a reversal day. In fact, in a candlestick pattern, this is a big reversal, a bearish engulfing pattern. Let's look at the same offset with the S&P. Look at this. Now remember, we did the update this weekend, and we were way down here. We showed you this projection, and the projection didn't know anything about COVID vaccines or anything else. But look what happened today. It opened right here, had great follow-through, moved into the projection window, and had a pretty big reversal day today. We were still up very nicely, over 1%. And in fact, when we look at the next longer projection, you'll see that it tells us that this should not be a reversal of importance. We don't know yet. But let's take a look at the Dow. Same thing with the Dow. Dow opened right here, this little hatch mark on the left. Had a nice follow-through, get well into the projection window, near the top of the nominal 20-day projection window. And again, remember, we were down here on the weekend, significantly below. We're talking about these are 500-point moves here. These spaces. This is 28,500. This is 29,000, 29,500. And look what we did today. 1, 2, almost 3,000 points up in the Dow. In fact, we were 3,000 from a close that we saw on Friday. The close was 28,323. Today's high was 29,933. So we're talking about 500, 1,000, like 50, I shouldn't say 3,000, but 1,500 Dow points from close to intraday high today. Now, you say, well, what about the longer term projections? Well, let's look at the 12-1 to 13-8. I think, as you know, as we showed you on the weekend, we do have even higher projections. This is the Dow, talking about a minimum upside projection of 30,517. So the short term will become a little trickier here because we did meet the nominal 20-day projection. In fact, on the S&P, let's go back to the S&P. Okay, here's the S&P, and this is the offset. Let's take a look at it. 48.4 to 55.3. That's the equivalent of a 10-week offset, nominal 20-week projection. And although we had already met this upside projection, we came even further into it today. Okay, here's the Dow. The Dow had not reached its nominal 20-week projection, 48.4 offset. Let's confirm that. 48.4 to 55.3. This is where we were Thursday, Friday of last week. Boom, into the projection window. So today, the argument can be made that different kinds of projections were met. Nominal 20-day on all three of the major indexes we look at. Nominal 20-week on the Dow, which had not been reached and was reached today. So to me, that means it's going to get a little tricky here. We do have higher projections, okay? And that runs a little bit contra to the technical. We have to keep an eye on this trend line. Has been incredibly important. We broke way above it this morning. I mean way above it. Further above it than we did back at the high in early September. Broke way above it and had ourselves a reversal day that could not stay above it. So this is going to be an important trend line, and it'll remain that way. Now, the projections are telling us that, at least in theory, in terms of projections, we should break through there. We do have higher projections. And long-term nominal 40-week projections, significantly higher. So, but I'm going to repeat what I repeated back here. Until or unless we get greater than 2 convincing closes above this trend line. In other words, at least 3 convincing closes convincingly above this trend line. then this is going to be a potential danger area right here, despite the fact that we have higher projections. And as you know, no one has greater respect for those than I do. So, a lot going on, a lot to follow over the next couple of weeks. We want you to look at this pattern. If you ignore the red trend line here and just look at the three envelopes, we have come up and slightly above, well, actually not quite above. Here's this red line right here above the bold trend line is where the 20% above, the envelope 20% above this 2-year moving average, 506-day moving average, okay? So we encourage you, if you're technically oriented, take advantage of this free offer we're making to read the special report, 18 pages of charts that show you this envelope going back for over 90 years and how the markets have reacted to them over the past 90 years on the Dow. And that's it for now. Thanks for watching. For our regular subscribers, we'll talk to you tomorrow. For YouTube people, thanks for watching.